Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go over market conditions and ratios to let you know what the current market conditions are, what the ratios are telling us, and what the ratios, how they're actually performing against each other. Let's just dive straight into it, and I'll give you my financial opinion here. We got the CRB to S&P 500 ratio, and the ratio is still continuing to go higher. We are going to cycle up and down a little bit, I'm sure, at some point. We could have a little bit of a pullback, but at this moment, we are just going straight higher month to month to month to month. So we are seeing the rotation of money. It is going to commodities and is outperforming the S&P 500. Looking at other ratios like the platinum to gold ratio, platinum looks favorable in relationship to gold. It's broken out of the pattern and it's doing a retest move. Still looking good, and we could potentially break higher here. On the dailies, we have broken higher. We're getting a little bit of a pullback just recently. Platinum's been outperforming palladium. We've been pulling on up from a very low level. So platinum is the buy here, in my opinion, versus palladium. So platinum's the buy against gold. It's against a buy against palladium, and it's also the buy against silver. We could break out to the upside and break out of this pattern, this falling wedge pattern of the platinum to silver ratio, where platinum is incredibly cheap against silver. And we could see an outperformance of platinum here shortly. Gold and silver, gold's been outperforming silver, so silver's been a laggard. We are coming up in this long-term resistance line that we could potentially break in the ratio. We've got palladium. I think this is palladium to silver ratio, if I can remember. Yep, palladium to silver. And palladium is underperforming silver as this comes back down. Palladium's been the weakest of the group, and that's probably my least favorite metal at this time. Dow Jones Industrial Average to gold, we are coming on down in the short term. Gold has been more resilient than the overall markets. We've been bouncing off this declining trend line, and we'll see if we can bounce or come down lower, meaning that gold is going to outperform the Dow Jones Industrial Average. That usually happens in increasing interest rate environments, and we do have an increasing interest rate environment. Interest rates have been pulling on up quite dramatically. Gold to oil ratio, we're at 17. We are still compressing. 15 is the historical average. We have not even hit the average, and we're at 100 plus, $110 per barrel. So we've been from a very cheap gold to oil ratio where oil was super cheap, and we've been compressing that ratio down and down and down, meaning that oil has been outperforming gold in the short term and medium term. The copper to gold ratio, we are dipping lower. We'll see what this thing does. We could drop down here. Usually when copper underperforms gold, does mean that we have could have a problem with the overall markets, with the market conditions in terms of how strong the economy is. That is coming under pressure. So that's something we're going to have to watch. We have the 10-year yield going higher too. So usually when the 10-year yield and the copper to gold ratio fall together, then you've got a deflationary problem. Now I think we have an inflationary problem. So we've got uranium to silver ratio. Uranium's moving on up, looking quite strong and beefy. This is uranium to S&P 500. That one also looks pretty good for a move higher eventually. So we're breaking out of that resistance line. We've got uranium to gold ratio. That is also looking good with this double bottom. We've paused there, and then we're breaking higher. We've got another resistance line right above it that we're between the resistance and support level. Uranium to crude oil. Crude oil's continuing to outperform at this time, and it's been declining back down. And then uranium to copper. Uranium is outperforming copper, and we're right at this long-term resistance line on top of these guys here that we're trying to break through and move higher for the outperformance of uranium. Lithium has continued to do very well. Yeah, we've got a little bloody nose up there, but we definitely have problems in lithium. Huge shortage. Scrolling on down, we're going to look at lumber. Lumber is at an elevated state, moving sideways. And we're probably going to pull back to some support area and then move on up over and break this pattern eventually. That's my take on it. Nickel's been moving sideways. There it is from that large surge of a move. There's a big surge. We have this big consolidation period that's happening after it. Palladium continues to sell off. This is one that I probably would avoid. We've got cocoa futures. Palladium just trades opposite of everyone else. It follows the like NASDAQ market more closely than the commodity market. Cocoa futures looking like the hammer pattern, moving sideways. We've got wheat futures moving sideways in a consolidation pattern. We've got soybeans moving sideways in a consolidation pattern on top of a long-term support line. We have corn futures, again, I think going to enter a consolidation period on top of this pattern. And then we've got copper futures pulling on back. Copper is getting a little bit weaker. People are afraid of a potential recession. And we're getting that knee-jerk reaction lower. There's that lower in copper prices. And we'll see where we firm up here. Again, we are pretty high. We might just do kind of like maybe a pullback to some point. I don't know where. We'll find out. There's a little bit of support, maybe this region in there that we could pull back to 380 or so. It's probably my guess, or maybe slightly above it. Maybe it's more like in here. Yeah, it might be about right. $4, 380, somewhere in that range. Looking at, the U.S. housing starts remains robust. That's up there. Inflation rates remain robust. It's like basically breaking out. The Baltic Dry aluminum. Let's go to aluminum here. Aluminum is pulling back with some ferociousness. Ferociousness, that's a great one. But it's pulling back here. Some of the copper companies are going kind of crazy, or aluminum companies going crazy to the downside. We've got the Baltic Dry Index. The Baltic Dry Index has been moving higher. It looks really good from that perspective. Very strong move in the Baltic Dry Index. Now, I'm going to go over some real estate trends just to go over that. This is the weekly housing trends view, data week ending April 30th, 2022. I haven't seen the monthly trends report come out, so I'm doing the weekly trends just to give you guys some information because it usually gets released by now. And I don't know if she's going to release it, but this is the research team at Realtor. So this week's data, here we go. It says key findings. The median listing price grew by 14.7% over last year. So house prices are up on a median average of 14.7%. This marked the 20th week of double-digit gains for the typical asking price. Even though mortgage rates now widely exceed 5% and home buyers have less purchasing power as a result of higher mortgage rates, home prices continue to rise. Oh, that's weird. Finding Value said that they would continue to rise. And why does everyone else think that this market's just going to turn on a dime? I do think that it will eventually slow down. I completely agree with that. The market will most likely slow down. But guess what? It doesn't mean it will stop and reverse. It's got to first slow. It's got to then reach an equilibrium point. And we've got more demographics coming into home buying years than what most people can read a chart, what they're worth reading charts. Coping with the increasingly expensive housing market has buyers searching far and wide for affordable real estate markets, according to Realtor, and has helped push home prices higher in many markets across the country as demand spills into affordable areas. Young first-time homebuyers are motivated as fast-rising rents prompts a serious consideration of buying instead of renting. Exactly what I said. Now you're looking at the rents. I would be a buyer today. That's just me because of rent prices. There's no way I would rent a house where I'm at $3,200 a month. I would just buy. But that's me. That's me. It says, in fact, homeownership rose among those under age 45 in the most recent quarter. Wait, I thought these young guys couldn't buy homes. I thought that they couldn't afford homes. How come their homeownership is rising amongst those people who can't afford to buy homes? Well, maybe they can afford to buy homes. With continued home price gains upping the ante, first-time buyers working to scrap together funds to get in the door can find help from local down payment resources at realtor.com. New listings, a measure of sellers putting up homes, were up 3% above 1 year ago. We've got active inventory down just 3% from a year ago. And remember, when we start talking percents, we are looking at very low inventory numbers in aggregate. So the percentages will decline because we are coming from such very low numbers. So I actually expect this to go up at some point, but the pricing will still go higher, even though your active inventory goes up with it. That is what I expect to go next, which means the market is slowing its rate down some. And what they say there is the number of homes for sale is past this year's seasonal low, which was also a record low, which means the number of homes for sale is climbing week to week and month to month as it typically does in spring. While the market is not yet caught up to last year's level, this week's marked a sizable step forward. The gap between this year's homes for sale and last year's is now just 1/10 the size that it was at the beginning of the year, and half the size it was just last week. The catch-up is likely to continue, as we've noted previously, and we expect active inventory to surpass year-ago levels very soon. And I agree with that. I do think that we will add some inventory at some point. Homes spent 7 days less on the market than last year, than the time last year. Wait, so we have active inventory that's down. We have days on the market that are speeding up still. And here's the overall market amounts. We have listing prices that are going up at a faster pace. We have new listings. I don't really care about that. The active listings down, 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 and down, but they're slowing down. The active listings are starting to meet the average of last year. And then time on the market is going faster. But at some point, we are going so fast that this is going to increase too, while the home prices still continue to go up. So I think that we have years to go up ahead of us, but it will slow. Yes, I agree with that. But we are not there yet, and we are going to get to that point soon. And then eventually, the home prices will be up 6%, not 15%. And then it will slow down, and we'll see the buyers and sellers start to equal each other. We'll see the inventory start to come back up to what I would consider to be normal levels, but I think that's years away. Years and years away. So that's what I think. Even though the affordability will go lower, I still think that the housing market will continue to go higher until we reach some sort of inventory equilibrium point at 6 months plus. And that's just going to take time. So that's what we have for the market update. That's ratios, market conditions. We have increasing interest rates, obviously. That's kind of baked in the cake here. And home prices continue to move on higher, at least the data ending April 30th. So we'll continue to monitor it together. Maybe we'll do the weekly housing trends view. And right now, everything is still in check for a commodity boom. Well, if you guys like the analysis, give me a thumbs up, subscribe to the channel, subscribe to my website. Platinum membership is the membership that I think you want if you want to subscribe. That'll get you all the access to everything on the channel, not on the channel, on the website. And you'll see what companies I'm buying and what I hold. And that's what we've got for the current market conditions, guys. We'll catch you next time. This is Finding Value.